Well, good afternoon and welcome to Midcap Radar. I'm Vivek Iyer, and joining me a little late on the show today is Hormaz. Well, markets are off the day's lowest points. Remember, we did see a very sharp intraday sell-off as far as the Nifty was concerned, but it has been bought into, and markets once again are trading in the green. The broader end of the markets, when you're looking at the breadth over there, and especially the Nifty Bank, the breadth there is very, very strong. But we have quite a lot lined up on the show for you today. So let's start off with the top headlines. Market off days low, but trades in a range with Midcap leading the way. Realty and PSU banks are the bright spots, while energy and autos drag. India's Defence Ministry clears purchases worth rupees 21,772 crore to strengthen the Navy and coastal security ahead of Navy Day. The 5 orders spell fresh orders for local vendors like L&T, Hindustan Aeronautics, Bharat Electronics and Garden Reach shipbuilders. Solar panel makers like Waaree Energies and Premier Energy surge in trade after US Commerce Department announces fresh round of duties for solar imports from Southeast Asia. Stocks gain nearly 1% each. Suzlon Energy gains after it banks a 302 megawatt wind project order from Jindal Renewables in Karnataka. This comes after a 400 megawatt captive wind project from Jindal Renewables last month. Oberoi Realty surges over 4% after Nomura initiates coverage with a buy rating on the stock with a target price of 2,500 rupees a share. The brokerage firm expects solid pre-sales and cash generation and says the company is poised for aggressive business development. Well, good afternoon. The market and the screen both look very strong at this point of time. The mid-cap index is up 0.8%, largely led, like yesterday, like the PSU banks. In fact, if you look at some of the PSU bank names, like Canara Bank, Bank of Baroda, all of these names are doing very, very well in the session today. Along with that, in the last half hour of trade, quite a lot of contrasting news flow coming in as far as PI Industries was concerned. That particular stock, if you could pull that up, seen quite a bit of a sharp up move and then immediately has cooled off, now up just around 1%. But Hormaz today, he's standing at the wall and he'll be joining me later as well. Hormaz, what are the top mid-cap movers in trade today?
Well, good-looking screen on the broader markets, even though the benchmark indices are a little choppy ahead of the RBI policy outcome on Friday. We start off with some of the gainers, and most of the gainers today within the broader markets are the new entrants to the F&O space, be it the like of PB Fintech, Paytm, Poonawalla FinCorp, all of them seeing gains between 3 to 4%. Suzlon too, after a partnership extension with Jindal Renewables, is up 3.5% in today's trading session. PSU banks continue to do well in today's trading session, but before that, it was the defense names that have received a 21,700 crore boost. The shipbuilders and Bharat Dynamics seeing healthy gains in today's trading session, though most of the others have come off the highs of the day. Speaking of PSU banks, as Vivek highlighted just a few minutes ago, and it is these names that continue to shine. All constituents on the PSU bank index trading with gains today, 6.5% to 9% higher. But more, mind you, most of these names have very little float in the market. Stocks that are doing well on the back of strong volumes in today's session, and HEG has now surged to a 6-year high after a 13% move today as well, carrying on from where it left off yesterday. Graphite India in parallel has surged another 7% as well. Phenolix Cables and Newgen Software too seeing volume-led gains in today's trading session. And lastly, some of the underperformers in today's trading session. Easy Trip continues to fall after trading ex-bonus, as does Kalyan Jewellers now, as is the low point of the day. Balrampur Chini and VIP Industries too now down to the lowest point, down 3% in today's trading session.
Thank you so much for that, Hormaz. Very few red on the screen, more green than red. But moving on, solar panel makers like Waaree Energies and Premier Energy surge in trade after US Commerce Department announces a fresh round of duties on solar import from Southeast Asia. Nikhil Nigania, Director and Senior Analyst at Bernstein, joins us now to decode this as well as talk about some of the recent listings as far as the renewable energy space are concerned that have done very well. Nikhil, first up, if you've had a chance to look at the news, we have been discussing of late about how Indian players especially are benefiting from various protections, from government, both within India and also some of the export players like USA who are benefiting from duties that are being put on Chinese origin players, especially in the module as well as panel places. How are you looking at the space, and do you feel that these duties can further aid the kind of growth that Indian companies have seen?
Sure. So if you look at the Indian solar cell and module players, especially the two specialized entities listed recently, Waaree and Premier, the benefits they are getting are twofold. So the second and third largest solar installations in the world are happening in US and India. And both these markets don't want modules made in China, which is making 90% of the modules globally. So that way, the domestic players are in a very sweet spot, given protective measures in India due to an ALMM list, which is there. So hence, you have to use Indian-made modules in utility-scale projects. And similarly, in the US, there have been duties imposed on imports from China. Now, the second part, which is the latest news which has come, is now regarding Southeast Asia. So what US is doing, so this is not a new development. This is a development which has been ongoing. This is a preliminary confirmation by the US Department of Commerce on putting anti-dumping duties up to 270% on solar cells made in Southeast Asia, specifically Vietnam, Malaysia, Thailand, and Cambodia. So what was happening is Chinese companies were setting up manufacturing facilities in those markets to ship product to address the US demand. Now this fresh round of duties, which is being in the process of being implemented would be imposing up to 270% of duties on those Southeast Asian countries as well, specifically on solar cells and modules made of solar cells made in those markets.
Understood. So, Nikhil, currently two players, Waaree as well as Premier, they are the ones that are doing very well. And, even post the recent listing, the stocks have given significant return. So, number one, you've also recently done a valuation exercise. So, valuations, where do they trade at currently? Are they justified? And do you see further scope as far as stock price movement is concerned?
Yeah. So, specifically on their valuation, we won't be able to comment. But on relative terms, if you see, from a capacity standpoint, let's take a Waaree Energy for that part. The capacity is about 13 gigawatt and has a valuation, enterprise valuation of close to $10 billion. Similarly, if you look at Chinese companies like JA Solar, for example, they have substantially higher capacity, close to 90 gigawatts across module, cell, and even ingot wafer, which is the more capex intensive part. And their valuations are similar to what Waaree Energy trades today. Now, in terms of our view on the sector going forward, so we think right now in a very sweet spot, but going forward, we see a supply glut happening in India as a lot of companies are entering this space. It's easy to enter, doesn't take too long to set up a solar module or even a solar cell manufacturing plant. And the barriers to entry are low, right? So we see supply glut happening in India. And even in US, there's a government push to set up a US-based solar module manufacturing facilities, cell manufacturing facilities, which could hurt the US export story for these players as well in the medium to long term. So we think the next 1-2 years is a very sweet spot, but post that, there could be challenges both in domestic market and in the export market in this area.
Nikhil, good afternoon. Thank you for joining in. That is what I was coming to, right? There's this overhang that persists from the new administration that is coming in the US with regards to these solar companies. And the second part being that now that you mentioned that the competitive intensity is going to rise with the fact that barriers to entry are low. Now, when it comes to execution, right, it has to be earnings that should justify the valuations. With these recently listed companies, the way they have run up, do you think that in the middle of all of these, in this rising competition and this overhang that comes in from the new administration in the US as well, do you think that they will be able to deliver on these lofty expectations that the street has?
Again, so very hard to comment on valuations, but yeah, I think earnings near term for these companies should be good, right? Because of the protective measures both in India and US. Even, if you look at rooftop solar scheme, which the government has, it is incentivizing domestically made, cells and modules. So they are in a sweet spot for the near term. So near term earnings should be good, but medium to long term is where we think the concerns are. And if that puts the valuation part in question.
Understood. Nikhil, so, we've covered solar cells, solar modules, in the solar value chain. But one particular company that we need to discuss is actually NTPC Green Energy. When the company listed at a market cap of close to 91,000 crore, even then, the street was of the opinion that for a company with a capacity of close to 3.3 gigawatt, the IPO was perfectly priced. After that, it's up almost over 30-35%. NTPC Green, we know you don't have formal coverage on the stock, but what is it that you can share, and does it have a right to win, the company themselves have been saying?
No, fair. So firstly, on the fundamental part of NTPC Green's right to win in the renewable space, see, renewable is a relatively simple business to do, especially compared to thermal. The biggest differentiators one can have, number one is cost of debt. Number two is land. And number three is receivables. And number four is transmission. right? So especially on cost of debt, NTPC Green does have an advantage against the private sector players. They borrow money at 150 basis points or even lower than the competitive private sector players. So in a sector which is 80% debt funded, 20% equity funded, that is a big advantage for a player to have. Second, even in terms of land, they have got a good land parcel. As per us, I think about 50,000 acres is what we could read from the DRHP. They have access and they have transmission with it as well. And lastly, on receivables as well, NTPC, what we understand is a tripartite agreement with RBI and state governments, which gives it a priority on getting receivables on time. So all of that fundamentally puts them in a strong place. But to your point, when on the valuation front, when we cover NTPC, the parent. In our SOTP, we ascribe a lower value than what it is trading at for the parent entity. Yeah. And we are positive on the parent, but the portion of value allocated to renewables in our valuation is lesser than what it's at.
Nikhil, I think most analysts will now have to go ahead and give a higher value as far as the parent is concerned. NTPC itself, given the fact that they have so much higher capacity, NTPC Green, still a nascent company as far as operational capacity is concerned. Nikhil, one last question. You track the entire space. What are your top picks? And as far as FY25 is concerned, or FY26 is concerned, what is it that you'll be looking for, especially in terms of announcements in the power space?
So top picks continue to be actually public sector entities in our coverage. So NTPC is one name we like still. And I think, especially given the green valuation, it looks an easier option to buy right now, NTPC, the parent. The second space we like are the power sector lenders, PFC, REC. They are cyclical plays. They obviously carry higher risk than what an NTPC does. But we think they're a good cyclical play and leverage play into the power cycle. Strong loan book growth, low risk of NPAs. And reversal of provisions, which we expect to continue. So those are the names we like. Power Grid is another name we like, though the key catalyst we had been playing for was their capex guidance going up, so which has happened already. Hence, our preference would be more towards the first three names I mentioned. Now, coming to the second part of the question, what to look out for next year? See, more than policy, what we are all waiting for is power demand to sort of start picking up. Last 3 to 4 months have been slow. Largely due to monsoons and cooler temperatures. But power demand is, the fundamental driver of capex and growth in this sector. And our longer-term expectation is of a 1x real GDP kind of a power demand growth. And that's what we are waiting for coming in the coming months, December, Jan onwards. So other than that, on the policy front, not a lot, to be honest, at this point on our radar. I think the thermal announcements already, our 80 gigawatts addition are in place, a transmission plan already out there. So nothing major we are waiting for on the policy front as of now.
All right, Nikhil, thank you so much for sparing time and joining us today to share your views on the sector as well as your top picks there, Nikhil Nigania of Bernstein. Well, time for a short break. Up next, we get you more on the markets. Deep Shah of SBI Securities joins us on the other side.
The TV, the news that you guys have been doing is the only news in India from a business point that at least I watch, and I think most people would agree with that. So I have to just congratulate you guys on 25 years and say you guys are doing a very good job.
Back with us here on Midcap Radar, the PSU Bank Index continues to move to the highest point of the day now, 2% higher there. The Realty Index also continuing to grow from strength to strength, 600 points up on the Nifty Bank. And the Nifty is back above the levels of 24,500. Good time to get in a chart check as well. Sudeep Shah of SBI Securities is joining in. Sudeep, good afternoon. Thank you for joining in. Well, how important is sustaining above this 24,500 mark for the Nifty? Now, if it does so, what happens to that? And couple that up with your stock recommendations as well for the afternoon.
Yeah, good afternoon, Hormaz. That's the way Nifty has moved in the last 4 sessions. Post that Thursday's cut of 300, 350 points and Nifty closing around 23,900. Since then, it is a higher top, higher bottom formation. That was just one day of that down move. Nifty closed that gap post-election results of 23,900, and now what we have seen is Nifty has even taken out this 24,350, 24,400 resistance. So from here on, we feel that the markets are constructively placed, and from here, we feel that 24,300, 24,350 will now act as a strong support on the downside, and Nifty on the upside could inch up slowly and steadily up to 24,750, 24,850 zone. And this, the main reason behind this is that apart from the banking, which is showing exemplary strength, it is the IT index which is equally supportive, and even Reliance, although not moving today, but has seen a good rebound in the last few days. So we feel that all dips would now act as buying opportunities here, and 24,300, 24,350 zone will act as a strong support going from here. The stocks that we like, one is from the PSU space, PSU banking space, which is Bank of Baroda. Now here we have seen a decent breakout on a short-term chart, and in the last few sessions, a move about 255, which was the 200-day moving average, has confirmed this breakout. So we feel the stock is headed up to 273, 275 levels in the coming few weeks. And on the downside, the supports could be closer to 254, which can act as a stop loss also. The second stock which we like is Apollo Tyres. Now, here what we have seen is in the last several sessions, the stock was consolidating between 500 and 520 on the upside. And today we have seen a breakout with volume. So the long-term charts were quite nicely placed. It was just the short-term volatility, which now I feel it's out of the way, and there's a consolidation breakout with volumes. So this could be added on dips and can be bought with a stop loss at 520. The targets are placed around 548 and 555 on the upside.
Okay, so Deep, so you've given us your view on the markets as well as your two calls, Apollo Tyres as well as Bank of Baroda, the ones you like. As you speak, the PSU banking bank, all of them today are doing very well. PNB, have a look at that particular name near the day's highest point, Bank of Baroda. In fact, the entire pack and even some of the private sector banks, especially the mid-cap names, are doing quite well. But we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Back with us here on Midcap Radar, and the one segment that was possibly the sector of the morning that we've been speaking about is defense, and that is after the Defense Acquisition Council approved 5 capital acquisition proposals worth 21,772 crore rupees to augment defense preparedness. Now, ICICI Securities has written a note on who are the likely beneficiaries would be. Upasana has those details. Upasana.
Well, ICICI Securities says that after a marked slowdown in domestic ordering, DAC has approved AONs worth 21,800 crores. Now, it says which is one of the smaller ones in the recent times as it comes after a gap of 3 months, but it is comforting and positive for the sector. Now, AON so far approved in FY25 is 1.6 lakh crore as compared to 3.6 lakh in FY25, and we further expect orders of 12 Su Mk1 fighters and Pinaka in next 3 to 4 months. Now, ICICI Securities has laid out some of the key picks in the defense space, which are Solar Industries with a buy rating and a target price of 13,250 per share, Azad Engineering with a buy rating and a target price of 2,450 per share, and PTC Industries with a buy rating and target price of 20,070 per share. Now, coming to defense PSUs, it prefers BEL with a buy rating and a target price of 350. Now, coming to key stocks that will be in focus individually, first up, BEL will be in focus, and it is likely to benefit the most out of all because of the possible award of electronic warfare suit package and trickle-down benefit of 20 to 30% value of shipbuilding orders and overall of electronic components and FCS of T72 and T90 orders. Astra Microwave is another stock in focus. Even that will be in focus, and ICICI Securities has given a buy rating on this with a target price of 935 per share. It says that it is likely to benefit from electronic warfare suit package and particularly next generation radar warning receiver. All these orders will be in focus on back of the Astra Microwave. And lastly, coming to HAL, even HAL is likely to benefit because of the procurement of advanced light helicopters and engine overhaul of Su-30 Mk1 fighters. Now, in engine overhaul space, it expects PTC industry also to benefit as companies executed MOU with HAL's Koraput facility for the supply of critical components. Hence, all these stocks remain in focus today on back of this.
Thank you so much for that, Upasna. So the Defence Acquisition Council going ahead and approving the AON, that is the acceptance of necessity. The entire defence pack is up in the session today. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.